Good evening and welcome to the Public Global. We are towards the end of 2024, and I wish and hope that all our viewers will have a prosperous and a good New Year's in 2025. And I hope all of you maintain good health financially, emotionally, and your family is secure. So today we'll be discussing the gross NPAs, which are called the non-performing assets. First, we're going to qualify what does non-performing asset means. A non-performing asset is an asset which has on a repayment schedule. Let's say, for example, if we take a loan from a bank and the repayment schedule is for 36 months, and if I default on my monthly installment for more than 90 days, it's classified as an NPA, where a bank then starts to the process of collection of the money through their collection agencies or through their own banking network. They basically connect to the customer and ask them if they're facing any problem. And in case it can be resolved, the collection agencies collect the money and give it to the bank. And then the loan, so-called loan, which has done 90 days default, is then classified as a normal loan and gets out of the NPA books. But if the gross NPA stays beyond 90 days and is unable to be recovered by the bank, then it's classified as a non-performing asset. And RBI has different rules that how do you address to such NPAs, whether they're corporates or private loans or loans which go to the companies. What we have seen in 2024, when the budget came in the March 2024, government had restructured. They had waived off about 16 lakh crore rupees of corporate loan as a default and considered them, got them off the books. And this constitute a majority of the loan that was to be recovered by the banks. And balance 10 lakh 20 crore was also sent to the IBC, which is the institution of reconstruction of these loans, IBC. And then there are other processes in which different tribunals try and recover these loans through securing properties or collaterals which were given at the time of giving the loan from the corporates. Uh, there are two parts to the NPA process. A is the consumer loans, which basically are for short-term needs. You can classify them as personal loans, home loans, credit card delinquencies, credit card outstanding against credit card payments, uh, gold loans, where you give some part of your gold to the bank and then get some loan. Let's say if you're a wedding in the family, or if you want to fund your child's education and he's unable to secure a student loan, so what you do is you put your gold in a deposit with the bank, and the bank gives you a certain percentage of the gold value of that particular day as a loan. And when you have money, you can always pay them back with interest and get your gold back. So what we have seen is a disturbing trend in 2024-25. As I told you earlier, the corporate loans, 16 lakh crore rupees of corporate worth loans, were defined as loans which cannot be recovered and were taken off the books. However, 10 lakh 20,000 crore rupees was referred to the IBC process, and in the IBC process, the recovery was not even 15%. In fact, if you would have seen my earlier programs, I would have I told you that Adani got an outstanding worth of let's say 69,000 crores. Adani got the companies for 15,900 crore rupees. So there was a haircut of about 74% to the banks of the companies whose assets were basically taken over by the Adani group. So these processes in which the recovery processes are started through the government appointed agencies, not much has happened. However, there is a risk involved in also significant rise in defaults amongst the consumer loans. As I said, gold loans, there is a high percentage of gold loans which have been defined as NPAs or loan defaulted by borrowers of banks. Now, there are institutions which is called public sector banks, private banks, and there's third type of institution which is called non-bank financial companies, which are called NBFCs. So between NBFCs and banks, there is a rise of 30%. If I collaborate in figure terms, that comes out to about 6,696 crore rupees. Close to 6,700 crore rupees has been defined as gold loan NPA as of data available on June 2024. And I said in the March budget, government had set itself a target of recovering 10 lakh 20,000 crore rupees of NPA of corporate loans, and had waived off 16 lakh crore rupees as corporate loans. However, this figure in the month of March, when the budget came in, was only 5,149 crores, the gold loans outstanding, which means that the amount did increase by about 1,600 crore rupees in just 3 months, uh, as per the data available by the RBI. Okay. And then gold loan growth in 2022 and 2023 compared with the previous financial year, if we look at, was just 14.6%. According to the RBI, that means that gold loan growth has been less, but default has been more, which means there's a distress in the economy. People are basically, giving their gold to the banks at whatever current value the gold is, and taking loans and not returning the money back, because the underlying asset, they don't have money to get the underlying asset back. So those collaterals then stay with the bank, which they auction and try and recover their money. So gold loans is something which, where the collateral can get you about 70 to 80% of your recoverables. It may not recover the interest cost, but it recovers your principal cost. So it's not that dangerous. However, in a reply to the RTI request filed by the RTI people, the RBI said commercial banks have reported, which is the public sector banks, have reported 62% increase in gold loans NPAs to about 2,445 crore rupees. So out of the 6,700 crore rupees, 2,445 crore rupees, close to 2,500 crore rupees is a default with public sector banks. Uh, Whereas this default, if you look at it in March, it was only 1,500 crore rupees. So there is a drastic increase between March and June of the defaults on gold loans. If we talk about non-bank finance companies, which are called NBFCs, the increase is smaller, at 24%, which is about 4,251 crore rupees in June 2024, compared to March 2024, when it was for 3,636 crore rupees. That means the underlying assets in gold loans of NBFC companies, the compliances have been better than the public sector banks. However, the question is also arises that this how is this surge in gold loan default? What do you attribute it to? So it said that the gold loan default is being attributed to the rising indebtedness, slowing down economy. People are not able to get money out of their businesses. Small traders, shopkeepers, small business owners who employ less than 20 employees or less than 50 employees are not able to recover their business costs by selling the goods. And big companies like SMEs and MSMEs, who employ 90% of the India's workforce, are also facing a lot of problems because of slowdown in the economy, and there's less demand for the products, and they're competing against competitors also for the margins. So since the margins are low, sales are less, production capacity is less, number of employees they can't keep more. So there is a lot of inadequacies in returning these loans which have been taken for short term purposes. And also it is also a kind of creating an unemployment scenario where there is a slowdown in the economy, so people employ less people, and those people who are not getting properly employed according to their skill sets also resort to taking loans to make their ends meet or make their expenses for children's education or parents health, because health and education, since it's in private hands now, has tenfolded in terms of costs, but income has not increased proportionally. Proportionately, that's why the reason why people are resorting to taking more personal loans and gold loans. However, since the slowing economy is affecting people's income, they're getting less people are getting jobs, and people who have businesses, they're making less money. So it is making it very difficult for borrowers to repay this money. And if we talk about the first 7 months of the current financial year, banks have reported a steep 50% increase, rise in on gold loans also. So there is a delinquency, there's 65% increase in delinquencies and repayments, and there's a 50% increase in rise in gold loans also. And this is driven by a rally in gold prices and certain deficiencies in the loan segment flagged by the RBI. RBI says that since gold was trading at 75,000 rupees for 10 grams, and people who bought gold at 45, 50,000 rupees took 70% loan on those collaterals, and now they don't have money to return back because their cash flow statements. And it's not just a person takes a gold loan and his responsibility towards repayment of gold loans is not flagged to other banks. Sometimes, people take multiple loans. They go to various banks and takes personal loans, small time personal loans where your income proof is not required. And then to leverage that personal loan, they take gold loans by keeping gold in the bank vault. And then if they can't repay their personal loan, then they default on gold loans also. So it's a trickle down effect where multiple small loans are affected, and that is how banks have to sign these NPAs off, because there's no mode to recover, and the tribunals at courts are very slow to operate. So sometimes small ticket loans the bank also kind of gives up, it gives away, and they don't fight it in courts. So there's a lot of default which they try and recover by increasing cost to service customers, whether they are minimum account balance maintenance or phone a bank services or checkbook services. So there are a lot of additional costs that have increased for normal clients because of such defaults. However, as far as gold loans are concerned, when these gold prices went up, people pledged their gold to meet household expenses, as I said, school and education fee, hospital charges, and they defaulted on these loans, and they found the loan amount is greater than the purchase price, and were oblivious of the fact that the credit score will come down after the default. So they're also scared if their CIBIL score comes down, then no bank is going to offer them loans. So customers who've rushed to pledge gold to take advantage of high prices, gold loans outstandings of banks have jumped. If I talk in figure terms, to 1,54,280 crores in the first 7 months of October 2024. It's a huge amount. Like, these are small clients who must have taken loans from 50,000 rupees to 5 lakh rupees. And now the number of clients who have taken loans and defaulted on loans worth 1,54,282 crore rupees, it's a sizable number of people who have taken loans on that. And this figure in March 2024, as I said, was 1,02,562 crore rupees. That means that there is an increase of 52,000 crore rupees worth of default in only 7 months of this financial year. However, the gold loan books of banks and NBFCs together is estimated to have crossed the 3 lakh crore marks. As I said, NBFCs, which are non-bank finance companies, and commercial and scheduled commercial and private banks, in terms of gold loans, they share an equal amount of disbursals. So if commercial and non-scheduled banks have total gold loans worth 1.5 lakh crore rupees, the similar amount NBFCs have given. So it's estimated that total figure of gold loans would be about 3 lakh crore rupees. However, these NPAs to banks and NBFCs have happened, whereas the gross NPA uh, managed to bring, well, but banks are claiming now that they have managed to bring their gross NPAs, which are like outstanding against all asset classes where they've given home loans, personal loans, car loans, or consumer loans. Their gross NPAs have, they say, they've come down from 6.97 lakh crore rupees, which is about 7 lakh crore rupees, which constitute 5.89% of the total advances that these scheduled commercial and non-scheduled commercial banks have made in March 2022 to 4.56 lakh crore rupees by March 2024. So if you see that the gross NPAs, when they say they have come down, PSBs have come down from 7 lakh crore rupees to 5 lakh crore rupees, this is on account of that these NPAs have been written off the books. Banks have been allowed through the new RBI rules that NPAs which are not recoverable at all, and there are no collateral assets which can recover the principal and the interest amount, those are written off the books. So if you say gross NPA have been brought down from 7 lakh to 4.5 lakh crore rupees, you can be rest assured that the rest of money has been foregone. It is not recoverable. 2.5 lakh crore rupees is not recoverable. However, RBI has also taken note of the irregular practices in the gold loan sector and has directed lenders to review their policies and practices. However, I don't know what policies and practices are not being followed, which will be followed now, whereas people will be more, people could pay better through better means, and there'll be less default. The central bank has also identified a lot of weaknesses in the system. which is monitoring loan to value ratios, incorrect application of risk weights, that if the gold prices go down, whether these customers will come back to get their gold release. There's a lack of transparency because during auction of gold ornaments and jewelry, uh, these when they try to recover costs through selling of the collateral asset, which is the jewelry in question, sometimes it is the recovery is not proper, because then when you see these gold ornaments go to the goldsmith, there is besides gold, there is nickel and other metals which are mixed with gold to make this jewelry. And when you melt it, there's obviously a notional loss of whatever gold is recoverable, because these are all 16, 14 carat or 12 carat gold jewelry. And when you melt them, you recover only 60% or 70% of the gold, the inherent value of the gold that is actually there. So the growing concerns of gold loan defaulters highlight the need for lenders to strengthen their credit assessment and verification processes. However, since gold loans were considered very safe for banks, so obviously their verification processes, barring checking on their Aadhaar card or their incidents where they stay, whether the house is owned or rented, how long they've been there, which office they work in, how long they have been working in that office, and also they take two witnesses. So all those verification processes are followed. Uh, However, I personally believe that there is a lot of slowdown that we are not talking about in the economy. People are not able to make their ends meet. Children education, the health expenditure for the elders, and also your fuel cost and your food cost has gone up by close to 60-70%, because of which there is a high rise in asking for these loans. And as I said, 7 lakh crore worth of gold loans, out of which the banking has been able to not recover much, is basically an alarm for the banking in future. However, it is also said that the organized gold loans expanded at a compoundable CAGR, which is called compoundable annual growth rate of 25% over the period from financial year 2020 to 2024, driven by banks which expanded these loans at a higher CAGR of 26%, while the NBFCs expanded at 18%. So for NBFCs, which are non-bank finance companies, the default is less because they expanded during the same period 18%. However, scheduled commercial banks and non-scheduled banks have been giving a lot of gold loans, because priority sector lending, big corporates or big companies or MSMEs and SMEs have not been taking loans from the banks because of slowdown in the economy. However, the growth in the case of banks was driven by agricultural loans. As I said, agriculture is in distress. Farmers are agitating because they're not getting minimum support price. They don't even recover the cost of the seeds and the fertilizers, and that is one of the reasons that the growth in the banks, the growth in loans in case of banks, is because of people in distress who are in agricultural activity, uh, backed by gold jewelry. This grew as a CAGR of 26%, while the retail gold loans grew by 32% on a lower base. So, since there's a lot of distress in the economy, and formal means of financing in agriculture is not available because it's not classified as an industry. So, agricultural loans are from private players is very expensive. Sometimes they pay 2% but or 3% per annum, which constitute about 24 to 36% interest over 1 year. So the share of NBFCs have drastically reduced because their growth is only 18%, because they have focused only on retail gold loans for consumption or business purposes. This is what ICRA says, which is the ICRA rating agency talks about it. However, in this, if we talk a little further, if we the as I talked earlier, the bank GNPAs, which is the gross national performing assets, the GNPA ratio to rise this year. There's a study which says that bank write-offs will remain a significant component of the NPA reduction. So, as I said, the banks have reduced their NPA from 6.5, which is 7 lakh crores, to 4.5 lakh crore. So, it can be understood that 2.5 lakhs to 3 lakh crore rupees have gone down the drain, and that money is never recoverable. So, these write-off are basically a major component of the NPA reduction, and banks see an uptick in respect of credit card receivables and gold loans across banks. As I said, apart from gold loans, the other asset classes, home loans, credit card repayments, personal loans, and there is a distress amongst consumers who have taken heavy exposure on credit card repayments, and they're also facing a lot of problems in paying small ticket size personal loans because they're already leveraged on gold loans with other banks. So a specific customer who's running, let's say, a shop in upscale market must have tried his hand in all towards all the banks by taking personal loans, gold loans. Has must have exhausted his limit on his credit card just to make his end meet, and this is basically an alarming for economy, and economy faces the brunt of it. The gross NPAs, which is called non-performing assets, ratio of scheduled commercial banks, which declined to a 12-year low of 2.6% in September 2024, may rise to 3% in March 2026. This is as per the study of scheduled commercial banks that GNPAs or gross non-performing assets are not going to reduce. They are in fact going to increase by end of March 2026. The estimate for the non-performing assets ratio for March 2026 is based on the macro stress test performed to assess the resilience of bank balance sheets to unforeseen shocks emanating from the macroeconomic environment. So, economists who've studied macroeconomic environment and who are also seeing these supply shocks and demand shocks are foreseeing that the GNPAs, which is the non-performing assets, will increase definitely. The aggregate GNPA ratio of the 46 banks may rise from 2.6% in September 2024, which is just 2 months back, to 3% in March 2026 under the baseline ratio, the RBI said in its financial stability report for December 2024. This report just came out 2-3 days back. So I'm quoting it that under the baseline scenario, the RBI says that GNPAs or the gross non-performing assets is going to increase. The GNPA ratio of banks may further rise to 5% and 5.3% in March 2026 under adverse scenario 1 and adverse scenario 2. So RBI financial stability report also says that it may not stop at 3, it may go up to 5.3%. While the baseline scenario is derived from the forecast path of macroeconomic variables, the two adverse scenarios are stringent, conservative, hypothetical stress scenario, which means it's a possibility, but it cannot be ruled out. So 3% for sure, it may go up to 5.5%. Non-performing assets ratio of public sector banks may rise to 3.3%, says the RBI, between September 2024 to 73% in March 2026. So RBI is very, very watchful on it. It also says that it may also go up from 1.9% in September 2024 to 2.9% in March 2026 for private sector banks. So delinquencies or non-performing assets of private sector banks will be a little less, but scheduled commercial banks may rise from 3.3% to 7.3%, it says, from September 2024 to March 2026, whereas for our private scheduled banks, it may increase from 1.9% currently to 2.9% in March 2026. And from 0.9% to 1.4% in case of foreign banks, because foreign banks, when in the 90s they came into India, they were doing a lot of retail lending operations. But over a period of time, most of these foreign corporate banks have exited their positions from retail asset loans, and now they mostly do corporate funding, or they are basically selling bonds and overseas investments. So, or they also support businesses in terms of funding their letter of credits. So, mostly commercial banking, foreign banks have shifted to. There are very few foreign banks which do retail banking. So, their delinquencies or their GNPAs is also less. The non-performing assets for foreign banks is far less than private banks and scheduled commercial banks. However, the stress test revealed that the aggregate capital to risk weighted asset ratio, which is CRAR, when I say the aggregate capital to risk weighted asset ratios, that how much aggregate capital they have and how much risk are they weighing against the assets that they're giving loan against, of 56 or 46 major scheduled commercial banks may fall from 16.6% to in September 2024 to 16.5% by March 2026 under the baseline scenario of and to 15.7% under adverse ratio 1. So it says that their capital aggregate capital to risk weighted asset ratio, which is the CRAR of 46 commercial banks, may fall further from 16.5% to 15.7% under adverse ratio scenario 2, which could be the worst scenario. However, No bank would fall short of the minimum capital requirement of 9% under both the scenarios. That's what is the silver lining in the cloud that the RBI financial report says. Uh, Half year slippage ratio, which is the NPAs measuring now acceleration to NPAs as a share of standard advances at the beginning of the half year have increased marginally, which means that the slippage ratio where loans are falling into non-performing assets, the share of standard advances to the beginning of the half year has increased marginally, 2.7% as of September 2024. However, the write-off to GNP ratio for foreign banks have been less because they are lending less than scheduled commercial banks and other banks. However, the report further says that the improvement in asset quality of the scheduled commercial banks was broadly based across sectors and band groups. So, as I said earlier, in the gold loans, even in the personal loan segment, asset quality has largely stable, except for a marginal uptick in respect for credit card receivables across bank groups because retail customers are suffering, which recorded the highest credit growth within the personal loan segment and may require careful monitoring. So, a lot of delinquencies on credit card payments, gold loan payments, personal loan payments. Small ticket size is still manageable, but large ticket size personal loans are also creating problem. However, for NBFCs, delinquencies level in consumer credit hub remains stable for banks and NBFCs. The report says, moreover, upgradation is declining, and slippage from special mention accounts, which is called those accounts where the first instance of default happens, the special mention accounts to NPAs are on the rise. So it's a near alarming situation. Nothing is going fine right now. Economy is slowing down. People are not able to pay their loans because of rising cost of education, health, inflation. RBI said it had a target of 4 plus minus 2% to control inflation, but inflation has been over 6%. Fuel inflation is over 9.5%. Food inflation is over 10.5%. Cereal inflation is over 11%. Your food oil, the oil that you cook your food in, has got nothing less than 12-13% inflation. So cost of living is getting more expensive. 11% of the borrowers originating a personal loan under 50,000 had an overdue personal loan, and over 60% of them had availed more than three loans during 24-25. As I mentioned, that people take multiple loans to leverage themselves against the previous loan that they have taken, and then when they default on one, they default on all. Moreover, nearly three-fifths of the customers who availed personal loans in quarter two of 2024-25 had more than three live loans at the time of origination, the report said. That means people who are taking loans and leveraging themselves against taking more loans are facing more default and are getting more blacklisted. So please be careful. 2025 is not easy. There'll be a lot of bumpy rides. Uh, Spend whatever you can in your means. Don't go overboard. Don't spend too much money on your daughter's or son's wedding or on their education. Don't send them to foreign countries if you can't afford it, because there are no jobs available even abroad in Europe and America. So I will suggest that whatever are your means, whatever you can afford, you should be able to make your ends meet in that expenses only, and keep a little savings for your rainy days, because you never know when those rainy days start. With this caution, I will sign off for today and wish you a very happy new year. And we shall speak about our next program on coming Friday in the new year. I hope and wish you all the best for the coming year, and your financial health and your physical health should also improve in 2025. I give you all the best. Thank you very much and goodbye.